because the host has to say,
Does that work? See if you can do it now.
It says it on mine too.
no.
Nope, it still says it. It says it on mine too.
Yeah. All right.
Well, I could have stayed in my little T-shirt and everything.
Shut up, Jay.
I apologize, you guys. I just can't believe this.
Better hope it don't come on. Yeah, you can't stay in your little T-shirt.
No, I put on a nice black shirt that.
Yeah.
So, I have to tell you guys, I have COVID.
Oh.
And yeah. So I was on a plane and the guy that was sitting in my row, he coughed a few times. I knew he was sick. I thought he just had a cold. And I was fine. I came home. I went to see my dad. The next day I saw Angie and the SBDC. And then I went to my sister's house. And then I went home. And then I started feeling sick. And nobody has COVID. Nobody has tested positive for COVID. Everybody's negative. So I'm wondering if it's the guy on the plane. But I was in Spaghettini's the night before. I was in a place called Spaghettini's, and I don't know, maybe when I was in the bathroom, I don't know. But I want to say, Angie, are we starting?
Yeah, go ahead. Yeah.
Okay, I just want to say thank you to all you all for being here today. Sorry for this, for all of the mishaps. Normally, our software works fine. We've hosted workshops and webinars before with no problems. I don't know what is going on today. What I do know is 75 people signed up for this class. It was 75 of you, and of the 75 of you, I'm going to say, how many are here, Angie?
We got 7 on the attendee side.
So we have 7 of you. That's about 10%. What that tells me is that you all are so serious about this that you're not going to let anything stop you. And that's the kind of determination that you have to be a small business. African-American small businesses in particular face an even higher mountain to climb than most because of the systemic racism, bigotries, biases, and prejudices that have been exacted against us in our community. What a lot of people don't know is that there was no dollar that circulated in its community more than the African-American dollar. Because we were segregated, our dollar circulated in our community up to 100 times. The only dollar that even matched ours was the Jewish dollar, and it circulated in this community up to 40 times. So the Black dollar circulated 2.5 times more than the Jewish dollar in this community. If we were on an even playing field and all things being equal, then today we would probably have one of the largest, if not the largest, economic engine in the country because of our innovation, because of our fortitude, because of our abilities to not let anything stop us. And that is the foundation you stand on. When your government is the criminal, as ours was, when your government is the culprit, as ours was, and when your government is the accomplice of criminal acts towards you, as ours was, we are doing a lot to still be standing. And so you have to know that when you walk into this playing field, that's the game you're in. Wells Fargo has been kind enough and smart enough to say, you know what? For the past indiscretions that we were involved in, we're going to make efforts to bring as many resources as we can to the African American small business community. And on our side, we have to be smart enough, intelligent enough, crafty enough to use every resource put in front of us to our advantage. So as we're doing these classes every Tuesday, is it every Tuesday, Angie, or every other Tuesday?
Every third Tuesday of the month.
As we do these classes every third Tuesday, know that we're also going to be giving you other resource opportunities. We have the Inclusivity Project. And I want to make sure that as you're doing this, that we put you into the Inclusivity Project, because the Inclusivity Project is going to get you loan ready. So you can get a loan for your business. So it's not just on your back of your savings and what you have, but it's the business itself. And what I really want you guys to do is ask a lot of questions. Take advantage of the opportunity tonight to really start getting your business on solid ground so you can be successful. I'm gonna give you guys a few statistics and then I'm gonna leave you alone. Every day that an African American business starts, there's an 80% chance that in 18 months or less, it will be out of business. And if that business should survive those first 18 months, there's an 80% chance that they won't last the preceding 18 months. And that number continues to go on and on till we dwindle small business out. 96% of our businesses are what we call micro and mini micro, meaning they generate less than $100,000 or $35,000 a year. Not make, generate. That's 100% of what you generate is $100,000 or less. 96%. Only 4% of our businesses generate $100,000 or more or have one employee or more. My mission is to make each of you one of those 4%ers. But I can't do it without you. And I'm going to be tough on you because I want you to win. I want you to be successful. And I want you to be able to tell the people that you talk to, this wasn't easy, this is hard work. But if I'm not going to invest in anybody, I'm going to invest in me and my own vision. Because that's what we have to do. Thank you guys for being here. And I look forward to working with you all over the course of the weeks. And next time we'll make sure that we can all see each other because Angie won't be blocking us. You guys notice Angie have it where nobody can be seen except her. All right, you guys, thank you.
Thank you, Jay.
If there's any questions right now, Angie, I'll answer a few questions.
All right. They'll have to type them in the Q&A box because they're not, the attendees are not allowed to talk.
Okay.
So we have a couple more people came in, so we're up to 10. That's great. So, but our first up is Lucius Davis from the Franchise Tax Board. Welcome, Lucius.
Well, good evening, everyone. And despite the technical difficulties, we are excited to be here. And we are going to try to share our screen. At least you guys should be able to see that. And can I get confirmation that you see that?
Yes, I see your screen.
All right, so let's get started. Thank you so much to the California Black Chamber of Commerce, specifically Jay and Angela for the invite this evening. I really do appreciate it. And yes, my name is Lucius Davis, and I am the Small Business Liaison at the Franchise Tax Board. Now, notice that I said my name rather slowly, Lucius. Now, the reason I do that is because my name is a little different. Sometimes it's a little hard to pronounce. And I've done many, many interviews and many presentations over my career. And I have found that if I don't make sure that you know how to pronounce my name, there's some very interesting variations that come about from it. For example, I've been called everything from loose shoes and licorice and luscious and delicious. Well, actually, those last two, I don't quite mind those last two, depending on who's saying it. Ha 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 ha. So, like I said, I'm from the Franchise Tax Board, and I can tell you guys are so excited to see me, right? Oh, I can feel it through the computer screen. Well, if not, that's understandable. Usually, when I mention I'm from the Franchise Tax Board, the air gets sucked out of the room. People start shutting down their computers and heading for the exits. But I am here to tell you that we are not all the bearer of bad news. How many of you out there know that there's a taxpayer rights advocate's office at the Franchise Tax Board? Anybody out there? Well, I am here to tell you that there is, and specifically, I am from the education outreach team and here to talk about what it means to be in business in the state of California. Brief background before we get started. Before I started working at the Franchise Tax Board, I was an overseas basketball player for about 13 years. I played in many, many different countries. I was exposed to many different cultures, customs, mindsets, ways of doing things. After I retired from professional basketball, I became a small business owner for 10 years. So I truly feel with the uniqueness of my background and the uniqueness of my experiences that I definitely can relate to what small business owners go through. And I truly mean that from the start all the way to the finish. From the anticipation and excitement that you feel when you come up with a dream or a vision and you start to pencil it out and you come up with a business plan, to educating yourself and researching on what it means to be in business, to the joy that you feel when you actually see your dream or your vision become reality, and the pride that you feel when you actually see it be successful and earn a profit. From the highs to the sometimes lows, how things just seem so darn confusing and oftentimes overwhelming, how there just doesn't seem to be enough time in the day to do things in the right way. And this is the big one, at least it was for me, how it seems like everything that comes into the business account goes right back out. And then some. Been there, done that, bought a bag of popcorn and saw the movie. I know how small business owners feel. And you know what? I commend you. I commend you for taking the time out of your busy schedule to attend an event like this evening, for educating yourself, wanting to do things in the right way, but most importantly, for pursuing your dreams. I know firsthand that it is not easy. So today we're going to be talking about forms of ownership. One of the most important decisions that you have to make as a small business owner is what form of business ownership will best fit your business needs. Or if you're a current business owner, if your current form of ownership still fits your business needs. We're going to be talking about some of the more common forms of ownership, such as sole proprietorships, partnerships, corporations, and limited liability companies. We have a great handy dandy resource for you, and it is so important that if we were having this in person, I will be handing these out to you. But we have a wonderful publication called Common Forms of Ownership. This is something that you can access online on our website at ftb.ca.gov. In the upper right-hand corner, there's a search button. You can type in Forms of Ownership, publication 1123. A link will pop up and you will be able to access the form there. That is what this presentation is based on. It goes over all of the filing requirements for the more common forms of ownership, but also for the less common or more complicated forms of ownership as well. If we had the camera on, I would show you because it's a little black book, and we like to call it our little black book. And you guys will be able to tell I'm very proud of it. Please go to our website. Please download this form. It is a handy dandy resource to have so that you can know exactly what your filing requirements are. And as Angela stated, in the interest of time, if you have questions for me, please try to save those questions for me until after the presentation. I know we got a little bit of a late start, and I got a lot of information to try to squeeze in to the time that I have. Okay. All right, with that being said, before we get into the forms of ownership portion of the presentation, there's a few things that the education outreach team would like to talk about. One of those is the California Earned Income Tax Credit. I know most of you are familiar with the federal Earned Income Tax Credit. Well, there is one for California as well. This might not be something that you qualify for, but it may be something that one of your employees qualify for, someone you know may qualify for. There are certain qualifications that have to be met. You have to have wages and adjusted gross income within certain limits. And you and your family have to have valid Social Security numbers or ITIN numbers, and you had to have lived in the state of California for more than half of the year. If you want more information on this, you can always go to our website at ftb.ca.gov. There's also a dedicated California Earned Income Tax Credit website called caleitc4me.org. That is caleitc, the number 4me.org. This is a great website. It has a lot of useful information on there. It has some calculators where you can pop some numbers in to see if you qualify. Please, if you or someone you know, one of your employees might qualify for this, please send them to that website. There might be some real money out there for them. The next thing we might like to talk about, of course, is our fantastic and informative website. We know, as part of the education outreach team, that being informed is half the battle. Our most informed clients are the ones that are the most compliant. A great way to do that is to visit our fantastic and informative website and to take advantage of the many online services there. We have some great online services such as WebPay, which allows you to electronically pay on your account. But our best online service is establishing a MyFDB account. We highly recommend that you do this not only for your business account, but also for your personal account as well, because it gives you real-time online access to your account where you can do things such as check to see if there's a balance due, check the status of a refund, check to see which tax returns we have on file for you. You can even answer correspondence. If we send you a notice, the dreaded notice in the mail, you can answer that through your MyFDB account. And the greatest tool on MyFDB is something called Secure Chat, which allows you to securely chat with someone about your account. And the great thing about that is it allows you to avoid having to call in and wait on hold for 3 hours. The next thing we want to talk about briefly is Tax News. Tax News is a monthly online subscription service that is owned by our shop at the Taxpayer Rights Advocate's Office. Well, we'll have monthly articles that'll detail any friendly reminders for when tax returns or payments are due, any changes to our policies and procedures, any new tax laws that might be coming down that might affect you or your small business. It is a great way to stay informed on all things business, all things taxes in the state of California. It is very easy to sign up. If you go to our website at ftb.ca.gov and you navigate to the newsroom section, there's a subscription services link on the left-hand side. You click on that link, pop in your email address, and Tax News will come to you once a month, totally free to your email inbox. The next thing we want to briefly talk about is the opportunity for your small business to contract or do business with the state. Contracting, working for, and doing business with the state can provide a lucrative opportunity for your small business if your small business can provide needed goods or services. In addition to that, the California state government has preferred treatment for specially qualified contractors, such as small businesses owned by underrepresented populations. In order to do this, there is a registration and certification process that you must go through in order to be eligible to work with the state. If you want more information on that, we have plenty of information on that process on our Business Opportunities and Vendor Resources website. We also have a small business and disabled veteran business enterprise advocate. Whew, long name. His name is Eric Helm Tillman, and he can also provide you the information on contracting, doing business with the state of California, and the registration and certification process. You can call him at 916-845-5511, or you can send him an email, and that is at eric.helm-tillman@ftb.ca.gov. Additionally, if you go to the Business Opportunities and Vendor Resources webpage, there's an online email link or an online web form where you can fill out your information, submit that form. That form goes directly to our small business and disabled veteran business enterprise advocate, and he will get back to you with the information that you need. Lastly, one of the things that the education outreach team is deemed important as well is getting information out about the gig economy. A lot of people don't understand that when you participate in the gig economy, you may have a filing requirement. There was a recent study that was done by the National Association of the Self-Employed that found that 70%, a full 70% of those that participate in the gig economy did not receive any filing information or tax information from the platform that they work for. And that is not good. So there's some important points that you have to understand if you or someone you know is participating in the gig economy. The most important thing is to understand what your filing requirements are and to file correctly. Understanding what your filing requirements are and filing correctly are very important, so you don't hear from us if you don't. The money you make needs to be reported to the state and the IRS. If you are considered self-employed, you will do that on a federal Schedule C, and then that information will be used for your California return, which is your Schedule CA. If you are working multiple jobs from different service apps, all the money you earn must be combined, even if you're splitting time between jobs. So if you're working for Uber, Lyft, and DoorDash, you have to combine all that money to see if there is a filing requirement. The total money earned is often enough to require you to file. You may be entitled to deductions and credits to help reduce your tax liability. If you are considered self-employed, you may be able to deduct normal and ordinary business expenses that might be able to reduce your total tax liability. So if you or someone you know is participating in the gig economy, please send them to our website at ftb.ca.gov. We have a gig economy section that is totally dedicated to getting information out, filing information about the gig economy. We have a bunch of useful links, all the filing information that you need. We even have this tax news live video, and I don't know the actor that they got for this. Word on the street is that he's actually a stand-in for Denzel Washington. He's that good. It's almost like an Oscar-worthy performance. Hey, who's that handsome guy? That's me. You can't see, but that's me. Just kidding, just kidding. If you or someone you know is participating in the gig economy, please send them to our website at ftb.ca.gov for more information about the filing requirements for the gig economy. All right, so now we're going to move on to our first form of ownership. And the first form of ownership that we will be discussing is sole proprietorships. Now, if you want to be in business today and you want to be a sole proprietor, then guess what? You would be in business. You would just need to make sure that you have the necessary permits and the necessary licenses for your particular business and your particular location. So for example, if I wanted to open up Loose Shoes shoe tightening service, and I have the necessary permits and necessary licenses such as a business license, seller's permit, building permits, health permits, etc., then I would be good to go. Some great resources in finding out what permits and licenses that you may need for your particular business and your particular location is the California Office of the Small Business Advocate. They have a fantastic website called Cal Gold that can point you in the right direction on what permits and licenses that you may need for your particular business and your particular location and your local small business development centers or SBDCs. These are some fantastic resources, and the great thing about these resources is that they are usually free. So please, please, please take advantage of those. Now, sole proprietorships are the simplest and least expensive form of business ownership. Why? Because there's no requirement to file any paperwork with the California Secretary of State. Because a separate entity is not being formed with this form of ownership, there's no formal transfer of assets in order to start the business. However, it is highly recommended that the assets of the business is kept separate going forward in order to keep accurate records. Having a separate bank account is highly advisable so that you can keep track of exactly what's coming in and what's going out. You want to keep as accurate records as possible, as much documentation as possible, just in case questions arise or unfortunately you get audited. Now, a very important point about sole proprietorships. Because a separate entity is not being formed with this form of ownership, you as the sole proprietor are personally liable for all debts, liabilities, and actions of the business. So for example, if Loose Shoes Shoe Tightening Service got sued because we made someone's shoes much too loose, ha 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 ha. Okay, you know what? That was really bad. But you know what? There's going to be a lot of corny jokes coming this evening, so you might as well just strap your seatbelts on and get ready for them. So if we got sued, they not only would be able to go after my personal assets, my business assets, but my personal assets would be attachable as well. My home, my car, any investments, any tangible personal property would be attachable as well. And again, because a separate entity is not being formed with this form of ownership, you and your business are basically deemed the same for income tax purposes. The taxable year of the business is the same as the taxable year of the owner. Most individuals are a calendar year for your taxes, so your taxes would be due April the 15th. All right, so a sole proprietor is a business owner that lists all of their income and their expenses on a federal Schedule C. And then that information will be used on your individual tax return, or for California, that is your Form 540. So all of the income for the business is being reported, and all of the expenses for the business is being reported as well. Expenses such as office supplies, inventory purchases, marketing and advertising, lease expenses, employee salaries, etc., those will all be reported as well. So for Loose Shoe Shoe Tightening Service, I would list all of my income and my expenses on a federal Schedule C. After filling out that federal Schedule C and a profit is realized, which is what we want, then that profit will be added to any other income on my individual tax return, and then that will be used to calculate my tax liability. Similarly, if I had a loss after filling out that federal Schedule C, then that loss could offset or be subtracted from any other income on my individual tax return, and then that will be used to calculate my tax liability. Now, another very important point about sole proprietorships. A sole proprietor is not an employee, Therefore, a sole proprietor must pay self-employment taxes on self-employment income that is derived from the business. So if Lucius owns Loose Shoes, that's a bit of a tongue twister right there. If Lucius owns Loose Shoes, then he cannot be an employee as well. Lucius must pay self-employment taxes on self-employment derived income because there's no automatic withholding. I know most of you are familiar when you work for someone, you're an employee and you get your paycheck, there's some automatic deductions that are taken out of it, right? You have your federal and state income tax withholding, but you also have your Social Security and your Medicare taxes. Those are automatically taken out of your paycheck when you work for someone. Well, as a small business owner or sole proprietor, when money comes into your account, it just comes into your account. So you must pay self-employment taxes on self-employment derived income in order to pay into the system. So if a sole proprietor cannot be an employee and Lucius withdraws money from his business account in order to pay himself, it will not be deemed a salary. It's just a withdrawal or a draw on that account. All right, so the next form of ownership that we will be discussing is partnerships or general partnerships. All right, so a partnership consists of two or more persons operating a business for profit. It can have an unlimited amount of partners, but it has to have at least two to be considered a partnership. So for example, if Bubba and Lucius wanted to get together to form a business, a partnership that sold and manufactured chewing gum, and they called themselves Bubba Lucius. Okay, did you guys get that one? Okay, I know that was corny, but you know what? I was called that back in the day as well. So I figured I might as well make good use of it and put it in the presentation. So if Bubba and Lucius want to get together and they want to form Bubba Lucius and they have the necessary permits and necessary licenses for their particular business and their particular location, then they will be good to go. Now, a question that often arises with partnerships is, well, hey, what about a husband and wife? Well, they have a choice. They can choose to be an owner or a sole proprietor of a business together, or they can choose to form a partnership. They would just have to figure out what the best fit is for the business, and much more importantly, what the best fit is for their relationship needs. So a partnership is a very, very, very flexible form of business ownership. And just like with a sole proprietorship, it is relatively easy to set up because there's no requirement to file any paperwork with the California Secretary of State. The partners themselves decide the organization structure and the distribution of profit or losses. It is highly recommended this is done with a written agreement or a operating agreement that details exactly how much each partner owns of the business, how much each partner has invested into the business, and how the profit or losses will be distributed. For example, Bubba and Lucius get together and they're like, you know what, man? We're both in it to win it. We're both going to give maximum effort. We've both invested the same amount of money into this business. You know what? Let's just split this thing up 50-50. Okay, that's just relatively straightforward. We'll just detail a written agreement that says that. But what if Bubba's like, I'm going to be traveling a lot and I won't be here as much as you, or I have another business to run and I won't be able to put as much time as you, or just in general, Lucius is just better looking. Okay, I am just kidding. I was just trying to see if you guys were listening. I am just kidding. So instead of having a partnership of 50-50, we can have a partnership of 60-40. Partnerships are very, very, very flexible in that way. All right, so a partnership is considered a pass-through entity, meaning that the partnership's profit will pass through to each individual partner, and then each individual partner will take that information and report that on their individual tax return in accordance to the written agreement. So the partnership Bubba Lucius with a written agreement of 60-40 because Lucius is better looking, guys. That's like one of the most important parts of the presentation. You're supposed to write that down. So that means 60% of the profit will flow through to Lucius. He reports that on his individual tax return. 40% of the profit flows through to Bubba, and he reports it on his individual tax return. Now, a general partnership is not a separately taxed entity, meaning that the partnership's profit itself will not be taxed, and there's no requirement to file any paperwork with the California Secretary of State, and it is not subject to the annual minimum tax. Now, a limited partnership or a limited liability partnership, those are separately taxed entities, and there are requirements to file paperwork with the California Secretary of State, and they are subject to the annual minimum tax. Now, these are less common forms, a little more complicated forms of ownership. If you want more information on those, please go to our website at ftb.ca.gov, or you can consult our little black book, Common Forms of Ownership publication as well. All right, so how does a partnership report its California income? Well, a partnership will file an informational return form 565 in order to report its income. In the process of filling out that form 565, a Schedule K1 will be generated for each individual partner, and then each individual partner will take that information and report that on their individual tax return in accordance to the written agreement. So, Bubba Lucius had a fantastic year. Through hard work and dedication, they chewed their way to $100,000 in profit. According to the written agreement of 60-40, because Lucius is, did somebody say better looking? Oh, you guys just made my evening. You guys are so nice. It is so nice when you get an unsolicited compliment like that. Thank you guys so much. So that means $60,000 in profit flows to the Lucius. He reports it on his individual tax return. $40,000 of the profit flows to the Bubba, and he reports it on his individual tax return. And lastly, just like with a sole proprietorship, Each partner is personally liable for all debts, liabilities, and actions of the business. So if you're getting any professional assistance, especially from an insurance specialist, please talk with them about any products like liability insurance that might be able to offer you some extra liability protection. For example, you guys know you're in trouble whenever I say for example. For example, Bubba's walking through the facility one day and he's talking with, let me back up. How many of you, I know it's old school, but how many of you out there have seen Forrest Gump, the movie Forrest Gump? Anybody have seen? You guys remember Bubba from Forrest Gump? My name's Bubba. You guys remember him? Okay, so that's my partner. Not the sharpest tool in the shed. And you guys remember what his favorite food was? It was shrimp. Okay, so Bubba's walking through the facility one day and he's talking with all of his friends about all the different foods that you can make with shrimp. And at the same time, he's eating some shrimp. A piece of shrimp absentmindedly drops out of his hands, bounces around the facility, ends up in the vat, gets mixed up, packaged up, and sent out to the masses. Somebody buys the gum, opens up the gum, expecting to taste cherry, and they end up tasting shrimp. And of course, in this litigious society, we get sued. Hey, there's the picture. We on there now. Look at that. Of course, in this litigious society, we get sued. They not only would be able to go after my personal assets, my business assets, the factory, our inventory, of course, our business accounts, but our personal assets would be attachable as well. Our homes, our cars, any tangible personal property would be attachable as well. So please talk to your insurance specialist about liability insurance so you can get some extra liability protection. Got so excited that my face got popped up there, I lost my train of thought. All right. So the next form of ownership we will be so now we're going to move on to our most commonly used legal entities. For corporations, the most common are C corporations and S corporations. And of course, we have limited liability companies, or the much easier to say, LLCs. California legal entities, they are formed by filing the appropriate documents or forms with the California Secretary of State. For corporations, you have articles in the corporation have to be filed. There's various forms that need to be filled out, depending on what type of corporation that it is, and you are subject to the annual minimum tax. For limited liability companies, you have articles of organization that have to be filed, and that is filed with Form LLC-1. And you are subject to an annual tax and possible fee. Now, this last sentence at the bottom is very important, and it is so important, I'm going to read it twice. You are taxed annually until formally dissolved or canceled. I'm going to read that again. You are taxed annually until formally, correctly, properly dissolved in the proper way. The reason I read that twice is because I'm part of a multi-state agency project team that is dealing with the issue of business entities forming, but not dissolving or canceling in the proper way. And when you don't dissolve or cancel in the proper way, you're going to continue to get hit with that $800 annual tax. It never fails. If this event was in person, someone will come up to me and say, hey, I got this notice from you guys, and it says that I owe you $2,400 plus penalties and interest. I'm like, oh no, what's going on? They're like, I don't know because I dissolved this corporation 3 years ago. Okay, so 3 times 800 is 2,400. Okay, did you file the appropriate dissolution forms with the California Secretary of State? Yes, I did. And here's copies. Okay, great. Did you file your final tax return and check the box that says final? And if you sent it in, even write final across the top? What's that? Unfortunately, in the state of California, it is a multi-step, multi-state agency process in order to dissolve your business entity. And I know it's not the most exciting thing to talk about in an event like this, but I wanted to make sure that if you have to go down this road, that you please, please, please do the proper research so that you dissolve or cancel in the proper way. We have a lot of information on our website at ftb.ca.gov. We have an entire section dedicated to closing a business entity. The California Secretary of State has information on their website, and the California Office of the Small Business Advocate has an entire section dedicated to closing your business entity with some step-by-step instructions in order to do that. Now, if you or someone you know is in this position, there may be some relief for you. There was some recent legislation that was passed called AB 2503 that now allows for the voluntary dissolution of a business entity. Now, there's certain qualifications that have to be met with this. You have to have been registered with the California Secretary of State for more than 12 months. You have to have ceased doing business or never conducted business, and the business entity has to have no assets. If you think you may qualify for this, you can go to our website at ftb.ca.gov, navigate to the voluntary dissolution section. If you scroll down, there's some applications to fill out, depending on if it's a corporation or an LLC. You fill out those applications, send them in, and the application process will begin. And if you qualify, you can get your total liability plus penalties and interest abated or taken away. So if you or someone you know is in this position, please have them do some research on AB 2503 and voluntary dissolution on our website. All right, so the next form of ownership that we will be briefly discussing is C corporations. A C corporation is a separate legal entity that is owned by its shareholders. What does that mean? A separate legal entity is a business that is given its own individual legal status, so that the entity's actions may be deemed separate from the individual owners or shareholders. Before conducting business, this is true of all other business entities, you must register with the California Secretary of State. It can be costly to maintain and set up. There's certain rules and regulations that a corporation must abide by. For example, the articles of incorporation that I talked about, drafting bylaws, which is basically a roadmap to how the business is going to be run, keeping minutes at mandated meetings such as board member meetings and shareholder meetings. This could be time consuming, a bit cumbersome, and a bit costly, especially if you're using an attorney to help you in this area. Now, with a C corporation, you have the option of using an income year or a fiscal year instead of a calendar year. This may or may not be advantageous to you depending on what type of corporation or what type of business that you have. For example, if you have a seasonal business such as Christmas trees or Halloween costumes, it may be advantageous to use an income year or a fiscal year instead of a calendar year. If you're getting any professional assistance, especially from an accountant or an enrolled agent, please ask for help in this area. Now, one of the advantages of this business types is that generally there is some limit to your liability. Generally, creditors may only go after the assets of the business for payment. So you guys remember the Bubba Lucius shrimp and the government fiasco? Well, if we had actually formed a corporation instead of a general partnership, then our liability would have been limited to just the assets of the business and not our personal assets. All right, so how does a C corporation file and pay its California taxes? Well, a C corporation will file its taxes using Form 100. One of the disadvantages of this business type is that it's basically taxed on two levels. It's taxed at the entity level at 8.84% on the net income, and then when the dividends are distributed to each individual shareholder on their individual tax return. However, shareholders may not deduct any losses for the corporation on their individual tax return. Now, we briefly talked about this before, but corporations are subject to the $800 minimum tax. And this means whether your business is profitable or not, the minimum tax you're going to pay is $800. Now, this is due the 15th day of the 4th month of the corporation's taxable year, and it is due whether you are active, inactive, operating at a loss, hiding behind a tree, chewing bubblicious. Basically, if you exist, the minimum tax you're going to pay is $800. Now, the only caveat to that is, and I guess this is the state of California's way of trying to be business friendly. The only caveat to that is for newly formed corporations, the minimum tax is waived for a corporation's first taxable year, but it's just the minimum that is waived, not the fact that you have to file and pay taxes. I know some of you are familiar when you first start out a business, there's a lot of expenses for the business, a lot of investment into that business. After that first year, you fill out that tax form and it shows that you have zero tax liability. Well, for that first year, you have zero tax liability. But in that second year, things are still not going all the way that you want them to, and you fill out that tax form and it shows that you have zero tax liability. From that second year on, the minimum tax you're going to pay is $800. All right, the next form of ownership that we will briefly discuss is S corporations. All right, so S corporations are very similar to C corporations. There's a few variations and limitations to them. Like a C corporation, it is a separate legal entity that is owned by its shareholders. Also, like a C corporation and all other business entities, you must register with the California Secretary of State before conducting business. And in order to be an S corporation, you have to elect to be an S corporation by filing the appropriate form with the IRS, that is Form 2553. Some of the differences between a C corporation and an S corporation. Unlike a C corporation where you can have an unlimited amount of shareholders, with an S corporation, you have a limit of up to 100 shareholders. There's only allowed one class of stock with an S corporation versus a C corporation where you can have various classes of stock. And shareholders for an S corporation can only be individuals, estates, or certain trusts versus a C corporation where you can actually have another corporation or an LLC be a shareholder. Now, with an S corporation, similar to a sole proprietorship, similar to a partnership, profit or losses passes through to each individual shareholder, whether the dividends are distributed or not. Now, for the entity itself, an S corporation does not pay federal income taxes. But of course, state of California, they want their piece of the action. So an S corporation will file their taxes using Form 100S, and they are taxed annually at a rate of 1.5% on the net income. So if Bubba Lucius Chewing Gum had elected to be an S corporation and we made $100,000 in profit, we will be taxed annually at a rate of 1.5% or $1,500. And then the rest of it will be distributed to both Bubba and I, and then we will report that on our individual tax return. And of course, S corporations are subject to the $800 minimum tax. And the last form of ownership that we'll be discussing this evening is limited liability companies. All right, an LLC is an entity formed under state law by filing articles of organization. It is a separate legal entity that is owned by its members. And because of that, and it's noted in its name, there is some limit to the liability of the members. Generally, creditors may only go after what each member has invested into the business. Just like with all other business entities, you must register with the California Secretary of State before conducting business. It is considered a hybrid business entity because it takes characteristics from different forms of ownership. And we're going to get into that in the next slide. And restrictions may apply to professional services that require a license, certification, or registration. All right, so here's where we'll get into the nuts and bolts of what an LLC actually is. So an LLC is treated as a partnership if it has two or more members. And in this case, it would generally follow the partnership rules in the way that it conducts business. So Bubba Lucius LLC, with both Bubba and I as members, we would generally follow the partnership rules. And you guys remember that, right? So instead of filing a Form 565, we would file a Form 568 for the LLC. In the process of filling out that Form 568, a Schedule K-1 will be generated for both Bubba and I, and then Bubba and I will take that information and report that on our individual tax return. An LLC that only has one member would be considered disregarded for federal income tax purposes. So if the member was only me, or if Bubba was actually a Bubette and we were married, we would be considered a single member LLC or SMLLC. And then we would generally follow the sole proprietorship rules. And you guys remember that, right? So we would file a Form 568, but that would just be an informational return. We wouldn't have to deal with any Schedule K-1s or anything like that. And then, just like a normal sole proprietor, we would list all of our income and our expenses on a federal Schedule C. After filling out that federal Schedule C, if a profit or loss is realized, then we would add or subtract that to any other income on our individual tax return, and then that will be used to calculate our tax liability. Lastly, a little more complicated, LLCs can elect to be treated as a corporation. In order to do that, they have to file the appropriate form with the IRS, that is Form 8832, and then they would generally follow corporation rules in the way that they conduct business. All right, so I know I'm getting close to my time, so let's get a quick recap of that. So, single member or partnership classified LLCs will file their taxes using Form 568. They are also subject to an $800 annual tax, and they may be subject to an annual fee depending on the total income. So it's basically taxed on two levels. It's taxed at the entity level with the annual tax and possible fee. And then when the profit or losses passes through to each individual member on their individual tax return. LLCs classified as a C corporation will file their taxes using Form 100. They are taxed annually, just like a normal C corporation, taxed annually at a rate of 8.84% on the net income. Of course, they then have to deal with the $800 minimum tax, and members will receive their share of profit just like a normal C corporation shareholder would. LLCs classified as an S corporation will file their taxes using Form 100S. Just like a normal S corporation, are taxed annually at a rate of 1.5%. Of course, they then have to deal with that $800 minimum tax, and members will receive their share of profit or losses just like a normal S corporation shareholder would. Really briefly, in dealing with the LLC fee, I wanted to put a little chart in here just so you can know what that is. The LLC fee only kicks in if you have a gross income of $250,000 or more. And it escalates from there, but I wanted to make sure that you guys knew that. And this is also something that is on our website and in our little black book. And oh, yes, you guys can see, this is why we call it our little black book. See, so proud of it. Also, in the back of this little black book is a handy dandy chart that I hope everyone will go to our website and print out and download, take a highlighter and highlight your specific form of ownership because it gives you a lot of information about your filing requirements, what tax forms you may need, when it's due, things that will help you, what your possible tax rate is, things that will help you to stay compliant with the filing requirements for your specific form of ownership. And thankfully, that concludes our presentation on forms of ownership this evening. Thank you guys so much in dealing with the technical difficulties. Thank you so much for listening about me and Bubba. Again, if you want more information, please go to our website at ftb.ca.gov or consult our little black book, or you can actually send me an email. We have a dedicated small business liaison email ID that is manned by me. That is at FTB small business liaison at ftb.ca.gov. Again, that is FTB small business liaison, all one word, at ftb.ca.gov. Thank you guys very much. I appreciate your time.
Thank you, Lucius. All right. Any questions anyone has? No, it takes just type in the question and answer box. We will open the floor again for questions after K. But anybody have any questions for Lucius?
No questions. I did a good job.
It might be typing. All right. Please go ahead. Oh, there we go. Someone put one in. I was a little late in joining this meeting. Will I receive a copy of the recording? I plan to put this recording on our Facebook page, the Chamber's Facebook page. I will actually put it there. Any other questions? No? Oh. Do the same filing requirements apply for an LLC that converts to a C Corp for tax filing purposes only? You're on mute, I think. You're on mute.
Yes, once you elect to be treated as a corporation, then you are deemed a corporation. So you would your filing requirements would line up with the normal filing requirements of a C corporation. So instead of filing a form 568, you would file a form 100, and then you would be taxed annually at a rate of 8.84%.
Is that good, Latoya? Oh, she said thank you. What is the form number to withdraw a business?
So I am assuming that you mean closing your business entity. That will depend on what type of business entity that you have. If you have an LLC, you want to go to the California Secretary of State's website and actually file the cancellation form. I don't know the form on hand, but if you go to the website, they have a list of the form that you need for each different business entity. You'll want to make sure that you file that. And then you want to file your final tax return for your last taxable year that you were in business. You have to do both of those steps to make sure that your business entity is closed in the proper way. So you want to, like I said, it's a multi-state agency process. So you want to make sure that you file those proper cancellation forms with the California Secretary of State. And then you have to file your final tax return with the Franchise Tax Board. If you're an LLC, that's a single member LLC or partnership classified LLC, that would be form 568. You want to make sure that that box that says final return is checked. If you're sending it in electronically, if you are a corporation, that would be a form 100, a C corporation, an S corporation, form 100S. Make sure that that box is checked final, and then that will complete the process.
All right, anyone else? All right, we will open the floor again. Thank you. Okay. All right, next up we have Kay Powell. She is her business name is Speedy Taxes and Bookkeeping. Welcome, Kay. You're on mute.
Thank you, Angela. Thank you, Jay. I'm very excited to be here. Hi, everybody. I know you've seen a lot. I know that you've listened to a lot. That was a lot of great information from Franchise Tax Board. And I'm just really excited about being here today. And we're going to talk about some stuff that's very important to your business. And it's called Bookkeeping 101, Bookkeeping Basics for small businesses. You know, this is what this is all about. It's about bookkeeping and about your small business. And so we just wanted to bring some information. So just a little bit about me. I know that some of you probably saw me at the First Friday, and I just shared a little tab. And what I said was I started doing taxes and accounting in 1973, and I actually have this business. I'm a small business owner, so this means a lot to me. I started in 1985 this business, and I've grown since then. And you know, every year we've grown, and I've continued, and now I do have a pretty decent business. I work for the state of California Public Services, and I did 34 years with the state, retired from corrections as their deputy HR director. I worked at Arthur Anderson accounting firm, Chevron. So I have a really good background. I love doing bookkeeping, taxes, payroll, just helping small businesses develop a structure where they can actually grow. And so this means a lot to me. So I am very honored to be able to come before you and just give you some tips, talk about how this can, how important bookkeeping is to your business and how it actually helps you see how your business is growing and what it's doing. So let's just kind of dive into this and look at the first thing is why bookkeeping is important. Well, why bookkeeping is important is because it is the catalyst to your accounting, your financial statements, your financial status. It tells you and helps you keep a temperature on what your business is doing. It impacts it, your growth of your business, success of your business, It allows you to know day to day what's going on, and to actually just understand and manage the fundamental part of your business. It's important. You need to have your financial statements, financial paperwork together, and you need to know if your business is making it, if your business is solvent, if your business is struggling. You can't just guess. So many people will say, well, I ask you how much they made. They don't know. How much you're spending, you don't know. If you're not on top of it day to day, then your business is going to just keep traveling. It's just going to keep moving, but it's not really going to be as successful as you like if you don't have a pulse on what's going on in your business. So this is very important. And you guys saw that, how important it was when the PPP came and it's giving all this money and they asked you for paperwork. I don't have no paperwork. When you try to get a loan, I don't have no paperwork. It's important for you to have paperwork, and you can't just come up with it at the last minute. You paying taxes, you know all this. You need to have paperwork and to understand what your business is doing. You need to talk to your investors. They're going to ask you for paperwork. If you're talking to loan people, they're going to ask you for paperwork. You can't make up these numbers. You can try. Then they say, can I see your bank statements? Uh-oh, now I'm puffed up these paperwork. I said I'm making this amount of money or don't have expenses, and the bank statements don't match up. So the financial part of your business is crucial to your success in being successful. Okay, so I can't emphasize enough. And what I find is that most businesses, they do well. You're great. You have good ideas. You're doing very well, but you don't have anything to show anybody about how well your business is doing. So why do you need to set up bookkeeping? Because you need to track your expenses. You got to set up a monthly budget. You got to know your income, but you got to know projected expenses. You got to know what you've already spent. You got to know what you're working with. You need documentation. You can't hold it up in here. You can't hold it up in here because people want to see validation. They want to see what your business is really doing, and you need to see it as well. Let me give you an example. Say you're diabetic and you have glucose. So if you ain't taking your test every day, you don't know how you're doing. You might feel like you're doing well. Then you find out when you start monitoring it and taking your test that, hey, I shouldn't have ate that yesterday, or hey, I shouldn't have I ate too much sugar or too much cookies or whatever. So when you got a business, if you don't know your expenses and you aren't tracking them, you might be spending money that you really need for the next month. You really need for upcoming expenses. So your documentation is how you're going to see it. And record keeping. Record keeping is important. So there are a lot of apps. We'll kind of talk about some things that'll help you, but there's apps that are there for you to track things, to track your expenses, to track your what you're doing. I tell everybody that you need to have a business account. You need to separate your personal from your business. I know it's easy that you look at, man, I'm at the McDonald's and you're there and you're there with a client, but you're using you're just there with your personal and you're using the wrong ATM card. You need to keep your business separated. And it's very important, as the guy at Franchise just told you, how important it is to keep not to integrate your personal with your business. So record keeping, I tell everybody, business account, use everything in business in your business account, because receipts, we're tracking expenses with receipts and all that, but they fade. But if you got a business account and you can show, hey, every meal on there is only with my clients. You should be able to tell them what client. My gas is for business expenses. I'm going to meet a client. So your record keeping, and I tell you the easiest way is not to integrate, not to mix personal with business. So record keeping. And then another reason why it's so important, and we kind of like briefly talked about that, is because it will help you manage your financial statements. It'll help you be able to, if you're going to a meeting with an investor or you're going to a loan company, you can pull up, you need to know what your balance sheet is, which is your liabilities and your assets. and you need to know what your worth of your company is. How you gonna know that if you don't have a balance sheet? You need to know the cash flow that's coming in. You need to know your income that's coming in. You need to know your expenses. Fundamental. The people that make it, they know this from the lowest level. They start out like they're going to be $1 million business. Don't start out like you just going to be a little side hustle, a little hobby, and then you blow up and now it's too late because you're overwhelmed because you weren't tracking the expenses that was going on, or you don't have an idea about my budget. You don't have an idea. You can't go and show somebody, this is what my company is worth. You can't go and tell anybody, this is why I need a loan, or this is why I'll qualify for a loan, because I can bring I can get a profit and loss statement like that. All I got to do is call my bookkeeper or punch some numbers and say, what was bookkeeping? What was my income expenses for the last 6 months? When I tell you how valuable this is, I can't emphasize it enough to a business that wants to soar, a business that's going to make it, a business. And then you can look at yourself and say, am I in the right structure? The gentleman just went through about a sole proprietor, LLC, or C Corp or S Corp. So I tell people, oh yeah, sole proprietor is good to start out, and that might be where you always be. But if you start blowing up numbers, then you need to look at, am I in the right place? How do you know that if you don't have your documents? Now, another big thing is, because I just told you that I do taxes and I love to do taxes, but you want to bring a shoebox over to me, a receipt. No, please don't. When I see you coming, I say, ching, 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 ching. Man, you on an hourly rate, because you bring a shoe boxes of expenses and you don't have no bookkeeping stuff and you don't have nothing that you can go, then you're going to get an hourly rate. Because I can't sit here, you're going to throw it all up here for me to add it up. That's not going to work. And you try to add it up, you're overwhelmed. So you want to try to take the easiest way to keep a pulse, a heartbeat on your business, on how it's doing. Hey, you may be doing so good, you say, hey, I want to become an S Corp. I need to be, hallelujah, I need to be an employee of my business. Wouldn't that be exciting if you an employee of your own business, because you making 6 figures and you're like, now I'm tired of paying that self-employment tax, so let me move to the next level, or maybe you have some investors or shareholders. You want to look at that, but you can't tell them it sounds good, or you can't tell them that it looks good, and you don't have no financial statements. So that's very critical to a business, for you to be able to really know what your business is doing. So why bookkeeping for a small business is important? Well, we talked about separating business and personal finances. That ensures that you're not personally held liable for any debts or issues related to your business. Now, I have been in audits, franchise. I have been in audits, IRS, where somebody mixes them together and then all of a sudden everything is fair game. Well, no, this is not, no, everything is fair game, because what you've done is you mixed everything together. Now IRS is looking in your personal stuff and they looking in your business stuff. And then also your integrity of your business becomes watered down because of the fact that people see that you're free willy with your personal finances, or you can't really explain, because there is, for instance, y'all know, for the mortgage, a lot of times they want bank statements and a profit and loss statement, and you got all this stuff mixed up. No, so you gotta develop good habits and learn how to be business mind. Keep your business over here, keep your personal over there. I've even seen, and I don't know if Lucius would say this, but I've even seen where if it's if you don't do that, then what happens is that it just gets all messed up, you guys. So I'm just telling you that it's very important. Now, all of a sudden, if you mix it up, I've seen them be able to sue you even on your personal, because now everything, all your funds are commingled. So don't commingle your funds, keep them in a place. These are really good habits and very important. And that's why you need to have a bookkeeping, so somebody can keep you and teach you how to keep your business in a separate place. So another point is identifying mistakes early. By managing transactions and reconciliation avoids financial issues later on. So in my business, we give a monthly report to the businesses on their income and expenses. And if we, for instance, don't understand the transactions, if we're trying to properly put it in, whether it's equipment, supplies, or whatever, then we have a dialogue with you. Well, it's better to do it on a month basis than to wait till a year later and you can't even remember yesterday about what happened. And I'm sitting here trying to track you down, say, what was this transaction? And you're like, I don't know. So if you or a bookkeeper keep a close eye on your business month to month, then you'll be able to catch those mistakes. And so you don't have to worry about 5 years telling IRS what it was, or franchise what it was, trying to remember what it was. We have it all reconciled, or you have your transactions reconciled for you. The third point is simplifying business finances. By streamlining it for tax processes and working with tax professionals, it can really save you money. Bookkeeping, those businesses that have bookkeepers, I love you guys. Now I love everybody, but the ones that say, here, I say, what is your profit and loss? What is your expenses? What are you? And they start bringing me their financial statements and they start giving me their documentation. I'll be like, ooh, you know how you hear that? Hallelujah. Anyway, I'll be so excited because I know that, first of all, it's going to save me a lot of time. I'll be able to get your taxes done. You won't be sitting here looking crazy or wait 2 or 3 weeks for me to get it done. Also, it helps you be able to say, hey, here we go. What I find is I find a lot of small businesses come like April 14th, which I'm not going to do, because they dreaded it. It's it becomes a laborious process. You trying to figure it out. You trying to get your expenses, and then guess what? A lot of times you miss them. You miss some of your expenses because or even you could miss income. I hope not, but you miss some of your expenses because you haven't been able. You don't know what you're doing. It's too overwhelming. I can't figure it out, and you certainly don't want to pay nobody. Pay me on figuring it all out for you. So it becomes a process that's overwhelming. People dread it, and there's just like dragging here. And your emergency is not my emergency. I love you, but April 14th, you want to bring, or 15th, and I'm gonna be here all night trying to figure out. No, we want to avoid that. You want to avoid that. So the next one, you want to avoid those mistakes I said in two, because of the fact that we can do a much better job, and you all, and helping you. What about number 4, keeping an eye? I did mention that you need to know where you are in your business health. So maybe next month you make changes. Next month you might not can afford to take a salary. Next month you might can't afford to do something that you want to expand on your company because you still don't have enough income, or what you thought was going to happen that didn't happen. If you got a good financial mindset on your business, you're projecting, you're using a vision, you're looking down the road. What am I going to do? Am I going to open up a new office, a new opportunities? Maybe I need to scale down because I'm in over my head and I can't afford this and I want my business to shut. But the main thing is to be able to have an eye on your financial health of your business, so you'll know how your business is going to keep moving. And you can't get a loan if you ain't making no money. You can't get and then can you afford a loan? So I know some of you people aren't paying the EIDL. You got the PPP and you spend it all up. Now you got the EIDL, you're supposed to spend that up. And then because you're bad spending habits, because it looked like a whole lot, because you didn't manage your money well. And so now you're like, how am I going to pay back that $150,000? They want $500 a month. I don't have $500 a month. All of a sudden, that's going to take your business down. So you want to be careful and manage your money. How are you going to do that? You have to know where you stand financially. And not just today, but for tomorrow. Now, you also need to be able to organize your documents and records. So for anything, if you want to buy equipment, if you want to get a loan, if you want to qualify for buying a home, you got to be able to provide documents. People are not going to just take your word for it, especially a small business owner. You have to. And guess what? Now you got to track IRS said, hey, Cash App gotta send you, they're postponing it, but this is what's coming down the pipe. Cash App gotta send you a 1099, Venmo gotta send you a 1099, Zelle gotta send. So you used to, hey, you can't lie no more. You used to say I made 100,000 and they send you stuff saying you made 150,000. So you didn't track your stuff. You was still taking some of your money and spending it here, spending it there, and you weren't tracking it. Guess what? The IRS is looking at every way and franchise to make sure that you report income accurately. And then they definitely want you to report your expenses accurately. And if you don't make no money for 3 years, IRS can come in and say that's a hobby. That on small business. Stop writing that stuff off. You can't write nothing off no more. You write up to what you make and that's it. That's a hobby. That means you like, but yeah, it's legitimate. No, they're saying, no, you're just using this as trying to reduce income or whatever. So now it's a hobby. Hobby means you make 12,000, you can only write off 12,000. That's it. You can't write off any more than what going on. So I do see a person that says, I scan all my receipts on my phone or take a picture of it. That's great. And then what do you do when your phone run out of room? Where you put them receipts at? And that's beautiful if you're audited. So an audit could be 1 to 4 years. Then now you need to find out what you're going to do with those receipts that you're scanning and how you're going to organize it and what you're going to do with it. I do still like receipts because if, for instance, you're in an audit and IRS says, okay, what's all these food receipts? Oh, but okay, they might pull one out and say, well, who did you meet with? Who's your client? So I used to take my receipts. I take my receipts and I would write on the back of them, met with clients, so-and-so, whatever, and took them to dinner or whatever. Or now I even do it on my bank statements. When I pull them off, I do that. But I say who it is because even your bookkeeping is going to be categorized under meals. But if you were to get audited, you're going to be able to give more specific information. So there are so many good techniques that you could use. There's apps out of there you could use as far as tracking your expenses, tracking your miles. There's apps out there tracking bookkeeping. So that's important for you to do that because the recall is not always that you can depend on. The recall. And then, hey, you guys, let me tell you, franchise, IRS don't do this, but franchise do that. If you got a license, you a barber and you don't file no taxes for a couple of years, Lucius, I know you know this. Anyway, franchise will send you something, say, well, the average barber or beautician make $3,000 a month, and you made, so we're going to just say you made 36,000 and now you owe us 3,000, and you're like, well, no, I didn't make that much money. Well, then you better go and look at your stuff and file your taxes, because they're going to just assess you that, and they'll give you a chance to respond to it. But most people, when they see a letter from IRS, when they see a letter from franchise, they start shaking. They can't even see what's going on at all. It makes them feel so worried and so concerned because they don't want stuff levied. They don't want things put on you. So, we're talking about businesses that are successful. We're talking about businesses that are strong. This is part of your foundation. This is part of your sturdiness. You can make all the money in the world if you don't know where it went, if you don't know how to track your expenses, you don't put it on some paper, then that's just something you to brag about. But what you want to do is keep that pulse on her, keep understanding, be in the game. I know Oprah said, I don't let nobody sign my check but me. Y'all do all this stuff, but I'm signing my check. So I think that I recommend that you incorporate this documentation, incorporate bookkeeping in your business. And also, there's also another part about it is doing payroll. A lot of people, they don't understand that part of bookkeeping is also doing payroll. It's you get to a certain point that you want to pay some taxes up front. If you're a legal corporation or whatever, you want to pay tax, do some payroll. Yep, you know, there's a lot that come with that, and I'm not really here going to go into every of it, but we will talk about it. There's different bookkeeping services out there or apps. I me, of course, I can really help you with that, but we offer bookkeeping services, and we run about $150 a month. So what I find is, why? Because we also pay for whatever software we're using, and then we pay someone to do it. So just imagine if I'm doing bookkeeping for you, we only making maybe $100, and I'm paying somebody that. I'm not making anything because I'm an advocate for the small business. But you can do it yourself. You can get it, like for instance, in QuickBooks. You can get a QuickBooks and pay them out $20 a month. But guess what? That's not your forte. So you go gun ho. And I know small businesses need to save money. So you're going to say, oh man, you know, I'm going to do that myself. I ain't paying nobody $150. I'm going to do this. And then next month, well, I didn't do that because I was busy. Well, next month, I didn't do that because I was busy. Next thing you know, it's a year. You don't pay $20 a month to QuickBooks, but you haven't did nothing. And they don't train you. If you want them to train you, then they're going to charge you $200 a month. But if you want to do it yourself, and it sounds right, and it seems like so easy, because guess what? You think my job is easy? I don't think your job is easy. But you know what I mean? You look at it, administrative work is considered for people. Anybody can do that. But do you really have time? Is that your expertise? Do you understand it? And are you going to set some time to do that? No, you're going to start out looking like you're going to do it, but you ain't going to end up doing it because it's not you. Your head going to start hurting. Man, I got to go figure out the transaction. I got to figure out this. I got to do that on a regular. That's not what you're going to do. But I tell small business, start out, at least try, because you can't afford to pay somebody $150 and you ain't making but $600 a month. So you're going to start that way. But once you start bamming up, then you need to blowing up. You need to say, hey, let me make sure I got a good bookkeeper. Because do you think Warren Betty that he does it? You think Donald Trump do bookkeeping? They do. Yeah, they got a lot more transactions than you have starting out. But I always tell myself I'm operating like I'm going to blow up. So bookkeeping services, you can actually do that. Yeah, I'm shamelessly saying that I would offer to do that as well. I'm available, but there are other good bookkeepers out there, and there's apps out there, QuickBooks, Zoho. There's apps out there, Xero, Wave, FreshBooks, where you can actually do it yourself, and it just helps you reconcile. It helps you keep on top of it, and it's a very basic accounting practice for your business. Payroll services, if you're making any money, you know, you come S corp, you have to be, if you own it, you do have to be on payroll, and you can't pay yourself $500 and you break it into 10,000. It has to be, IRS ain't playing that game. You got to pay the reasonable amount for payroll. So let's think about this. When you're a sole proprietor, when you're an LLC, single whatever, single entity, you are paying self-employment tax. So you're paying payroll taxes always. They ain't not playing with you. Whatever your net is, you're paying payroll taxes. So what I find is, so a lot of people are like, how come I owe $5,000 and I only make, you know, 40,000, and this other person made 40,000 and they only paid because they paid it up front with their W-2. You're paying it on the back end. Self-employment tax is Social Security and Medicare, 15.3%. So you're a one of the two, but you're paying payroll taxes at the end of your income, where other people that are W-2 are paying it in the beginning. And so you got this big tax bill because you didn't plan for it. You didn't do quarterly taxes. There's so many ways that you can minimize that, but you have to be upfront and understand that's part of the process. Paying payroll taxes. Payroll taxes is what IRS wants, no matter what. So if you're an S corp, you're going to pay it up front, and then you'll just pay regular taxes. But payroll taxes is in addition to your income. So if you're in a 22% tax bracket, you're going to pay 22% of your net income plus self-employment. So you put that together, you're paying 37%, but that's IRS numbers. But it's important to understand you can mitigate that with planning, with looking at, things that you can do for your business. And then, but you want to look at how you want to do that, so that there are some things you want to look at. Am I going to buy a house? What am I doing? I'm not going to spend up all my money. I need to be, I don't want to liquidate everything so that I can have a solvent business, so I can qualify for things. So you want to, I sit down with my clients. I don't just do your taxes. I sit down and I talk to you. What do you want to do tomorrow? What is your plan? What is your agenda? Do you want to stay on the map? Are you budgeting? Are you doing planning? And then we also, some of them I have to do tax resolution. I need to help you figure out how to get out of your bind that you in. Maybe we look at offering compromise. Maybe we do call, you got problems, we call the advocate's office. So all of this is important in your business. Think, people, think. It's not just about your product or your services. It's about surviving. It's about scaling up. It's about creating a business that will be here for years to come. Legacy. It's about all of that. So you want to look at the fundamental parts of a business, the fundamental parts of, am I doing good record keeping? Am I keeping up? Can I produce some paperwork to people when I want to? Am I loans? Can I get a loan? Because I can produce some financial statements. And can I just call my bookkeeper and say, give me a profit and loss statement. Give me an income statement. I need a balance sheet. I need a cash flow. I need to know what's going on. And won't you feel so good that you're not overwhelmed, that you don't feel like you're being drowned with all this information, and you can't show people, I got a good business. Where? I got a good bit. Show me your financial statement. I don't have that, but I know it's good. I know it's good. They want to know what are your spending habits? What are you doing? Are you paying your taxes? Or, you ain't gonna get no kind of nothing until you are right with IRS and franchise. That means that you have a payment plan or something. So what you do, you walk in fear. I have people, they don't file for 10 years, walking in fear because they're so afraid about, I don't know where to start. My business is, I have a business, but I can't prove it. I have, income, but I can't prove it. So, this is so important to your business. This is to you, to be able to be so proud and say, I walk into the bank office and I can produce all the paperwork I need. I can get whatever I want, credit that I want. I'm credit worthy because I'm on the map, because I'm doing good work, and I'm able to prove it. And so, and then you got to do the taxes, y'all. So Speedy Taxes and Bookkeeping Services will provide services to you that will help you. I know you all. I take the burden from you. I don't just allow you to just be sucked up and overwhelmed by what's going on. I'm not afraid of IRS. I'm not afraid of franchise. In fact, I love on them. I talk to them. They are my friends because I have good practices, and I will teach you how to good practice. But if you want to have good work ethics, if you want to survive, if you want to be the Warren Beatty, if you want to be Donald Trump, if you want to be the greatest CEO, you gotta have a good financial structure to be able to prove to the world that I exist, prove to the world that I'm solvent, prove to the world that I have the backup and the validate what my business is doing. And the best thing you can do for your business is not just try to do your bookkeeping, but actually have somebody help you. Let me tell you, so you can do what you do and they can do what they do. You cannot do all of these things well. You only can, God put you on earth to build this or to make this service. And here you are spreading the time that you're using to try to do your bookkeeping. Just imagine you give somebody $100, $150 or whatever, headache gone. And it's done right. The experts, they will make sure. We will, bookkeepers do it and they bring it up. Your work is not sloppy. It doesn't look like it's thrown together by somebody who don't know what they're doing. It's up to IRS standards. It's up to franchise standards. It's up to loan standards. It makes you loan worthy. It's up to what you need to tell the world, I got a business and it means something. And so I think that's important to all of you. I hope that was some good information for you. You know, I'm a road dog. I go fast in what I'm doing because I try to get this information out to you, but I'm so bubbling over with that information because I feel like I got something that really can help people, that I can create value to you and help your business be part of your success of your business. This is my contact information. Got an office in Plumas Lake, office in Elk Grove. My website is speedytaxesusa.com. There's my phone numbers, email. So I can help you in so many areas in your financial part and being able to take a headache off of you and make it good for you. So I hope that this was some valuable information. I'm open up now to questions and answers that anybody would have. I'm love to answer any questions. I hope I did a thorough job, but if you have a question, I will take them now.
Thank you, Kay. So any question for Kay and Lucius, so if anybody has any questions for either one, please, this is the time now to type them in.
I mean, you mean to tell me I did that good of a job? What? That's what I'm talking about. Lucius, we did a good job. I'm really so excited. So, I want to tell you, the Black Chamber of Commerce, I just want to say, keep doing the work you're doing. Keep supporting these small businesses.
California Black
Oh,
Chamber.
I'm sorry. California Black Chamber of Commerce. Thank you, Jay. California, I want to say you guys keep doing what you're doing.
Thank you.
And I'm honored to be a part of it.
When you use, I have a extra card that I use on Turo, and on QuickBooks on your phone, you can scan it and they let you put notes on it for gas receipts, and so you can keep track of it. So if anybody has to do that, you
Angie, there's a question.
Yes.
Hi, Kay. Do you provide migration services for customers moving from QuickBooks Desktop to QuickBooks Online?
Yes. Yeah, that's a tough services, but yes, we can move it from desktop to online.
Do you have hourly services or do you have packages? How does it work with you?
So we have packages. Our packages they start like $150, and that includes paying the software fee. But some people, I have retainer fees. Some people have hourly services. It depends on what they need. For instance, if I have someone that comes and say, here's 12 months, I'm going to of statements, and I need a P&L, that goes to an hourly rate. And
what's your hourly rate?
$150 an hour.
Okay. And how much for small businesses, mini micro businesses, how many hours do you think of time do they need for somebody like you? Like if I need to budget it out, am I budgeting for 10 hours, 20 hours? What am I budgeting for?
It depends on if it could be, I would say start out with 5.
Okay.
Mm-hmm. I try to help micro businesses get it all done in 5 hours.
Okay, that's $750. That's manageable.
Yeah. That's a good question, Jado. Thank you. I appreciate it. I can't express enough passion on how much this is so important to everything that you're doing when you have a business. And I'll tell you some tips. If you can't afford me, if you can't afford an app, hey, do an Excel spreadsheet. Put some kind of Excel spreadsheet, and I actually probably have some I could send people where you're tracking every month your expenses yourself with some categories.
Oh, you have a template already set up?
I have a template, yeah. Mm-hmm. Because I could provide that, because my heart is for you to get it done, not for me to make money. Yes, it's great for me to make money, but my really heart for it is to help you survive.
Oh, we got a question. What's the name of the receipt scanning app that was mentioned? I use QuickBooks.
Well, is that it? I see another question, or is that the same one?
The same one. You're doing it.
Oh, okay. All right.
Well, I want to thank you guys for coming. Sorry for the technical issues, but I have all those folks' emails, which I'm gonna pull and reach out to them. Next month will be Wells Fargo. I think they're gonna talk about payroll. And then I'm trying to get the, and I'm gonna reach out to Stephanie. I'm trying to get the city of Sac, the violations department, to come talk to small businesses when they have a brick and mortar and they have dealing with violations and the consequences behind that and what they need to do. So I'm actually, and I'm gonna ask Stephanie if she can contact LA, if there's LA, because I'm not sure if they do different rules. So we want to be able to
Yeah.
touch everything in small business.
Yeah, but so we have to, so Los Angeles is totally different set of rules. So, but so if we're going to do that, maybe we should have somebody from Southern California on as well.
Yeah. Mhm.
Okay.
Mhm. And just to let you guys know, tomorrow you guys will be receiving a survey, the small businesses. Please complete the survey. You'll receive it in your email. And Lucius, do you have anything to say? Anything to
No, outside of thank you guys so much for having me this evening, and think about me the next time you guys put on these workshops. Small businesses are near and dear to my heart, and especially those that are looking for information and wanting to find out how they can be as successful as possible. And Kay, I always appreciate your presentation, and I always, whenever I talk to a small business owner, tell them to, if they can afford it, please work with a tax professional like yourself, at least through the first year or so, so they can kind of get the ropes of because it gets tough for small business owners, especially when you're wearing all the hats. And I know you know that because you're one.
Yes.
So it was very nice to hear your presentation today, and you're another contact that I can send small business owners so they can get some help. So thank you guys. Appreciate
And
it.
we're hoping that Lucius will come to our first Friday to talk to our group in February. I'll send them the information.
Thank you.
Jay, you want to close us out? Were you good?
Yeah. Thank you, Lucius. Thank you, Kay. I really appreciate you guys and the small business people. Thank you guys for working through the difficulties. And that is the kind of resilience that it's going to take for you to be successful across the board. So again, we had 75 people that signed up today. And of the 75, really 7 of you, because the other 2, one is Selena Pryor from the Black Small Business Association, and Stephanie Beard, who was our director for the LA office, are on. But it's 7 of you guys here. That tells me that you guys weren't going to let anything stop you from being here. So I hope you are that diligent every third Tuesday, because that's how you're going to win. The resources are here for us. They are specifically looking for African American small businesses. Wells Fargo is specific about it. The Inclusivity Project is specific about it. If you want to know more about the Inclusivity Project, reach out to Angie and say, I want to be part of the Inclusivity Project. Our job is to get you loan ready, not for you to just get a loan, but when you need one, when you're ready for one, that you're capable of getting one, because we've put everything in place for you. And we put resources in front of you like Kay, not for you to just hear them, but for you to engage with them. Kay gave you all her information. Lucius gave you all his information. Engage with these people. Don't just do it on the night of the workshop for these 2 hours, this is how your business is going to be successful. This is the kind of work it requires to have a successful business. So thank you guys for coming out, and I'll see you guys on the next one in February.
February 20th.
Okay,
Thank you, and good night, you guys.
Thank you and good night. Bye-bye. Got your number, Lucius. Thank you.